What is going on, guys? Welcome back. It is Institutional here, and I'm here to show you guys a little video or a little recap of what you're supposed to do when it comes to backtesting, right? So we understand that from the mentorship, we're not supposed to use this replay tool as much because ICT doesn't do it himself, and he says to just go through it when it comes to a day-to-day basis. So we're gonna go ahead and study the price action from the 22nd. And I'm gonna show you guys just how we're supposed to do it and how you guys can capitalize from it. Because me myself, I was looking for longs when it comes to the 22nd. And why I was looking for longs is because we can see that over here we have essentially equal highs and a lot of liquidity. But if we take a look at step back from the left, we understand that here we have this order block that's protected, and here we have a swing high, and here we have a swing low. So overall, this structural point is a long-term high that should not be broken. So if this is broken, then we'll probably shift to a bullish bias. But since it has not been broken, we have to understand that we are still bearish, which essentially that's what happened. So what we want to start doing first is marking off our swing high and our swing low point. So if we look at it, here is my swing high. Here's going to be my intermediate term high that I'm looking for it. So I'm going to go ahead and mark that off as my intermediate term high. And then we can go ahead and clone this and put this to the bottom, because this is going to be my swing low point. So essentially, I should only be looking for shorts all the way to down here. And why is that, you might ask? Because if we look at it and we put our Fibonacci's, here we have a premium, right? So here is where we should be looking for shorts all along. And down here, oh, sorry about that. Let me see, oh, it didn't fix it. Let me put that up one more time. So here we're looking for shorts, and at the bottom here, if we want to be looking for short scalps, we should be looking for longs, because here's our discount, right? But overall, we understand that we are looking for longs because we are in this bullish scenario. So we can go ahead and erase this. And this is the range that we are currently on when it comes to H4. So what we do next is we drop into M15, and we do the same thing. We go ahead and mark off our levels. So looking at the M15, what do we see here? Here we have our intermediate term high with a bearish order block. So this high, this order block right here, should be respected. So we can go ahead and mark that off. Long-term high, sorry. We have our long-term high plus OB. And now what we do next is go ahead and mark off our swing low point from this M15 area, which is down here. So here is our M15 range, essentially, right? Now what we do next is we go ahead and mark off our areas when it comes to our day-to-day time frame where we could have capitalized from it, right? So we go ahead and look at the 22nd. We want to go ahead and see the 8:30 opening price. So 8:30 is here, and our 11 opening price where we stop trading is over here, right? Next, we want to go ahead and mark off our afternoon session, which is 13. So we put that off right there on all the way to 16 or 16:30, but I like to just stop trading at 16 right there, because when it comes to 4 o'clock, people are going to start closing their trades, and at 5 o'clock, there's just no volatility. So I would say trade from 1 to 4 if you're looking to trade afternoon session, but don't try to trade the afternoon session too much because price can get messy a lot of times. Sorry about that. So now we can go ahead and look at the price action from a day-to-day basis and see what happened here. All we're looking for now is this. We want to see a range when it comes to M15, right? We want to see this range being broken. So essentially we would have an intermediate term high here. We want to see that being broken. So we have a high right here. We want to see that being broken. Then we have a swing low over here. So swing high, 3 sub candle, swing low, 3 sub candle. We want to see that broken. And then we want to look at a fair value gap to happen here and trade it when it comes back up to it. It's better if there's an order block right here because that's double confirmation, but if we have this process, then it's a very high probability trade, and you're looking to trade it all the way down to the M15 range to take the profits there. So that's the model that we're looking for when it comes to the ICT 2022 mentorship. And if we take a look back and now look at the price action from the 22nd, we can see just that has happened. So we look at it like this. We have a swing high right here being broken, and we have a swing low right here being broken, right? So now what we're looking for is, where is our entry model, right? Where do we have entry model? Down here. And we can see that here we have a displacement, here we have a displacement, and here we have our 3-step candle process. So we can go ahead and mark that off right there. Here is our M15 fair value gap. But we understand that we don't really trade from that. We trade from the M5. So we have the M15, but we drop down to M5. Now when we look at the M5, we can see that, oh, I forgot one very important part, which is marking off your New York and midnight open candle. So let me go ahead and do that real quick for you guys. So we go to the arrow, we try to find now our New York midnight candle, which is gonna be over here. So we put this line like so. So the idea of this, the idea of backtesting like this is to see what price action has done throughout the day. And then when you do that, you're able to see what the price action has done, and you're able to capitalize from it when, oh, sorry, I put that wrong. Oh no, actually I did it right. It's okay. Yeah, so we have the midnight candle right there. So that's okay. Yeah, we can just put it a little bit lower. So essentially, how you backtest like this is you look at the price action from a day-to-day basis and you see where you could have capitalized or where you messed up from or what you could have done differently. And when you do this every single day, then you start getting a better perspective from the price action itself. So when you're trading out from a day-to-day basis with the actual trend and from actual time frame perspective, you can get those trades and capitalize from it. So here's our midnight opening price. Now we're gonna want to go ahead and mark off our 8:30 opening price, which is gonna be around here. So let me find that over here, right there. So this candle is our New York opening price. So we can go ahead and mark that off, our coordinates. And we put opening price. So now we have the level set up. And now what we're looking for is, again, the displacement, which we have here. And we have our fair value gap here. We're looking for prices to drop down lower. And then once it comes back up, we have our sell limit there. So we go ahead and put our sell limit right here. And we put our short above that 3-step candle. So 1, 2, and 3. And our take profit would be where? Either here, right? At a 3-to-1, or down here, essentially a 7-to-1, almost, right? Or 6-to-1. So that would be your entry when it comes to that backtesting session. Obviously, this is hindsight. So it's not so you get the trades wrong. It's so you can see where you could have gotten them right and you're able to capitalize from that when it happens again the next day. So now we're looking at it, we follow price. And what do we see happens next? We break this. So now this becomes our intermediate term high. And we made a new order block. So now we also have an order block right here, right? And we have an order block right here. So this up close candle move right here is our order block. And we understand that since we already mitigated this order block to the left and we touch this fair value gap, right, we should not come back up towards here. And now since we made a new order block and a new fair value gap, this is now our intermediate term high. So what we're looking for now is this fair value gap right here, right here. We have a new fair value gap. And now what we're looking for is price to come back up towards it. So price comes down beneath it. And then here we have a swing high point, right, that we have to break. So we broke that. And your entry is right here. And you want to put your stop loss where? Right above the order block. TP1 right here, 2-to-1, and TP2 right here at 5-to-1. So you start doing this from a day-to-day basis. And once again, you're able to understand what price is telling you. So now we go ahead and we close out of our New York session. So 11 New York session is done. Now what we're looking for is our afternoon session, which is from 13 to 16, so 1 to 4. And now what we look at here is, what do we have here? We have a drop down, right? And we have a fair value gap right here, 1, 2, 3. And if we look at it as well, we also have a bearish order block. We have this up close candle. But the problem with this trade right here is that we never broke out of a swing high. So remember, we want to see a swing high broken. We want to see a swing high broken. We want to see a swing high broken. And we want to see the swing low broken, right? Swing high right here, swing low, right? But essentially here, we only had a swing low broken. So we broke out of the swing low, but we never broke out of the swing high. So this is more of a risk entry. But if you were getting on the risk entry, you still have the criteria, right? You have a break below structure, you have a new intermediate term high, and you have a bearish order block with a fair value gap. So you could put your stops right here, and you're going to be aiming for a nice 5-to-1 on your afternoon session. So this is the way that you backtest ICT 2022 mentorship, and this is how you start seeing what's happening with the price action and how you guys are able to capitalize from it. So I hope you guys got a little bit from this video, just a quick one so you guys can understand how we're supposed to actually backtest this model and how you guys can now start getting a better insight from it when the model starts happening. What you want to see in, again, simple 3-step process. You want to mark off your M15 highs, your M15 lows. You want to see if you are at a premium or at a discount. What you want to see now is a swing high form, a swing low form. You want to see now price break above it. This swing high, this is broken. You want to see price break above the swing low, this is broken. You want to have a fair value gap here. You want to wait for price to tap it, drop below it. Once it drops below it, then you're looking for a touch back up towards the fair value gap, and then you're able to capitalize from it when it comes back down. And that's a simple process, and that's a simple model that you're looking for from a day-to-day basis. Of course, it's not that easy, but if you start studying it and you start seeing it from a day-to-day basis, then it will eventually get easier, right? So I hope you guys got a bit from this video. I will see you guys in the next one, and safe trading, guys.